The stock market has reached a tipping point. Through the end of August, the S&P 500 has climbed 17.5%, trading yet again near all-time highs. In addition, a lot of those top performing stocks are looking a little stretched in terms of valuation. And to add on top of that, we are entering September, which is historically the worst performing month for the S&P 500. But as you know, I am constantly on the hunt for undervalued stocks, as I firmly believe there is always value to be had somewhere in the stock market. And in today's video, we're going to be taking a look at 4 of the top stocks to consider buying for your portfolio during the month of September. And let's be patient with these, because if we do in fact get a pullback and history yet again repeats itself, valuations are going to look even better for these 4 stocks. So before we take a look at these stocks, do me a huge favor. Click that like button down below. Subscribe to the channel so you're notified anytime we drop new content, and let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me thank today's video sponsor, which is Dividend Wealth. Dividend Wealth is one of those many resources I utilize to not only research stocks, but to find ideas to dig deeper into, particularly when referring to dividend stocks. When you log into Dividend Wealth, you are immediately hit with their front page dashboard, where you can find great ideas around dividend paying stocks in a number of different categories, whether it's high yield, dividend aristocrats, dividend kings, or my favorite, dividend growth. Plenty to choose from, but let's choose dividend growth since that's what I tend to focus on the most. When you click on that, it will take you to companies that have regularly increased their dividend, and you can even filter by dividend growth percentage. In addition, at the top, you can see they have a screener. So if you wanted to narrow down your selection to large caps with certain dividend yields and dividend growth percentages, you can do that as well. Many great tools at your disposal, and they continue to add to it on a regular basis. Right now, if you want to try out this fantastic service, you can check out the link down in the description below, where they're offering a 14-day free trial. And if you want to add on a subscription, if you use the code ROUSSIN, ROUSSIN, they will give you 50% off the selection of your choice. Check out Dividend Wealth today. Let's begin with September stock number 1, which is ASML. Stock ticker, ASML. If you've been a big believer in NVIDIA, or you're a big believer in this AI craze that we're going through and believing that we're in the early stages, then there's no reason that you shouldn't be a big believer in ASML. There is none of these high-powered AI chips without the likes of a company like ASML. After all, they don't create chips, they create the equipment, which then creates the chips. The company has a market cap of $356 billion, and over the past 12 months, shares of ASML have climbed 35%. However, over the past month and a half, the stock has fallen nearly 20% off its recent highs, providing another opportunity for long-term investors to get in. AI continues to be a major tailwind for companies like ASML, and very popular analyst Gene Munster from Deepwater Asset Management is a big believer in AI. He believes that we are still in the early stages, and we have another 3 to 5 year window for this AI craze to continue. In fact, he went as far to say that AI will have a bigger impact than the internet.
It's a belief, a strong belief. I'm staking my career that AI is going to be having a bigger impact than the internet.
If AI even comes close to that, ASML is going to be a big beneficiary. You can try and pick and choose different AI chip companies, or you can just pick the equipment maker that provides the equipment to all of these different semiconductor companies. Taking a look at valuation, we could see that analysts are expecting the company to generate 2025 EPS of $32.89 per share. And over the next 2 years, the average annual growth rate is going to be right around 35%. The current forward PE with that estimate is around 27.4, which is well below the company's historical 5-year average of 42 times even. And this gives the company, based on that average growth rate, a PEG ratio below 1, implying tremendous value in this stock. Analysts also tend to agree on the upside as they have an average 12-month price target of $1,172 per share, implying 30% upside from current levels. And that leads us to September stock number 2, which is Constellation Energy, stock ticker CEG. We just talked about an AI-related company. We talked about the importance of AI, the impact of AI, and the continued growth of AI moving forward. Regardless of whether AI continues to expand at a rapid pace, the current environment is driving demand for things like data centers. And with the increasing demand of data centers for both AI and cloud, among other things, this is driving demand to the grid, and a company like Constellation is reaping the benefits. The company currently has a market cap of $62 billion, and over the past 12 months, it is up 86%. Yes, a utility company up nearly 90% over the past 12 months, doubling up a company like ASML. But utilities have been clawing back some gains after a less than stellar 2023 year. But the question that many investors might fairly have is there more in store, or is this overdone? Well, if you're a believer that AI is still in the early stages, or even if you go away from AI and look at a growth driver like electric vehicles, and even if you don't want to talk about electric vehicles, how about the movement in the US at least to more renewable, cleaner energy? All of these things benefit a company like Constellation. When looking at valuation, analysts are looking for the company to generate 2025 EPS of $9 even. This gives the company a forward PE multiple of 21.7 times. They don't really have much of a 5-year average considering the company is quite new, having been founded back in 2021. So it's still in its infancy stages in terms of growth. Growth for a utility, that is. Taking a look at analyst expectations, you can see that they have a 12-month average price target of $227 per share, implying 15% upside from current levels. And now for September stock number 3, which is Alphabet, stock ticker GOOGL. So we started with an AI technology company, then we moved to a utility company. Now we're going to take a look at a company that operates out of the communication services. That happens to be one of the largest in the communication services. Meta Platforms and Alphabet easily hold those top 2 spots as they make up a third of the XLC, which is the Communication Services Select Sector Spider ETF. For those of you that subscribe to my newsletter, The Stock Investor's Edge, you know that Alphabet is my single largest holding in terms of individual stocks. You see this through my monthly portfolio updates. And if you're interested in checking out my entire portfolio, you can use the link down in the description below and get yourself a free 7-day trial. But back to Alphabet, which is my largest overall holding, but it's also one of the most underappreciated and undervalued Mag 7 stocks on the market today. But this won't be the case forever. But for now, we'll take advantage of it. In terms of size, Alphabet currently has a market cap of $2 trillion. And over the past 12 months, shares are up 20%. However, since topping out in mid-July, shares of Alphabet have pulled back 15%. Sticking with the AI theme we've been talking about in this video, Alphabet is yet another company that is taking advantage of this. They are, again, underappreciated for how much progress they have made, but after all, they have fumbled the rollout of their AI. And also, the CEO recently came out and said one of the risks to Alphabet as a company is under-investing in AI. But the thing I love about Alphabet the most is it isn't overly reliant on AI. They have multiple different revenue streams. They're one of the largest cloud players. Obviously, they're the largest advertisers with the 2 largest search engines in the world, with both Google Search and the one you're watching this video on right now, with YouTube. And in case you haven't heard, there's a presidential election this year, which the company like Alphabet and Meta are expected to be huge beneficiaries, generating billions of those ad dollars from both candidates. In terms of valuation, analysts are looking for the company to generate 2025 EPS of $8.65 per share next year, which equates to a forward PE multiple of just 18.8 times. EPS growth over the next few years is expected to average around 15%, which I believe should be even higher, but regardless, that puts the company with a PEG ratio of 1.25 currently, making shares look, again, valuable. Analysts are also high on the stock, giving the company an average 12-month price target of $205 per share, implying 25% upside from current levels. And that leads us to September stock number 4, which is Alexandria Real Estate, stock ticker ARE. If you've been watching this channel over the past few months, you know that I have been pounding the table on REITs. And did you know that over the past 3 months, the REIT sector has been the single best performing sector in the S&P 500, and it has not even been close. They have doubled the next closest sector over that time period. There's a number of different names I've went through in videos and also gone through during our weekly live show on Wednesdays. Many of them are up huge over the past few months, but some may be questioning, is it all over? Well, Alexandria hasn't really participated, so there's still a few stragglers. When it comes to size, Alexandria currently has a market cap of $20.6 billion. And in terms of performance, this is a REIT that hasn't really done much over the past year, up only 1.5%. And over the past 3 months, when the entire REIT sector has climbed 16%, Alexandria Real Estate has climbed roughly 3%. This REIT has lagged its counterparts and is poised for a move higher. Alexandria is labeled as an office REIT, but it's nothing anywhere close to your traditional office REIT. This is a company that has high quality assets in very high barrier of entry markets. They work with life sciences company where a lot of research and development takes place. They also work with universities among many other different asset types. If you're on the search for value and you're looking for real estate exposure, look no further than Alexandria Real Estate. The company is currently expected to generate AFFO of $7.85 per share next year, giving them a forward price to AFFO of just 15.2 times. This is nearly half of where the company has traded over the past 5 years, which has been 27.3. But let's say the stock no longer warrants that high of a multiple. Even if you drastically cut that historical average and bring it all the way down to 20 times multiple, shares of ARE could reach nearly $160 per share, implying 30% upside over that time period. Let's take a look and see what analysts think, where analysts are still somewhat cautious on the name, but they still have an average 12-month price target of $133, implying nearly 15% upside from current levels, something I think is very attainable in a lower interest rate environment. So there we just looked at 4 stocks to consider buying in the month of September. All of them coming from 4 different sectors, 3 of them connected in some shape or form to AI. Down in the comment section, let me know which of these 4 stocks would you consider buying here in the month of September. And if you haven't done so, make sure you smash that like button down below, subscribe to the channel, and we'll see you in the next one. Take care.